Today is New Year's Eve, 2022. Let's start with our disclaimer as we always do. Then, because it's the year end, we'll go over the MEJT system and see how it fared during the year. We'll make some long-term calls and also say what we're planning to do when the market reopens on Tuesday. This is a good time to pause the video and review the rules of the channel. If you find the videos helpful, please promote them. If you find the MEJT system helpful, please give me a review on Amazon. Look for the pattern with the early low. This is it. When the market reopens on Tuesday, it should have a pattern with the early high. Thursday featured a strong rally. I looked for a big drop and possibly a collapse on Friday. We got the big drop, but this action has changed the short-term picture. Note again how these green lines, previous FOMC announcement prices, are good support resistance levels. The only call MEJT gave during Friday's trade was a sell signal. Unlike other systems, a sell signal in MEJT just means there's a target at a lower price, and that printed immediately, so we didn't have to go any lower. Doesn't mean you wouldn't, but you didn't have to. There are a number of reasons why I think next year could be a positive year. This is a monthly chart. We have a bar which is a reversal bar. When the Bollinger is flat, Bollinger Band's flat, my work says this targets a challenge of the upper Bollinger Band, and while these things change, a challenge would tell us we're probably going to the upper band area, which is near all-time highs. Let's see how the MEJT system fared. We get about 650 MEJT targets every year, and not everyone leads to a trade. We get about 500 standard targets and 150 ultimate targets. So during 2022, we had 7 standard targets which haven't printed yet, and we have 3 ultimate targets which haven't printed yet. So out of 650, 10 targets might seem like pretty good, but actually it's a statistical outlier. System is usually far more accurate than that. It implies we're going to see those targets print. This is how the system has done in the 21 years since it was invented back in 2002. You can see in the previous 20 years, and in 13 of those years, every single standard target has printed. Out of these 20 years, I've only had 3 other years where we saw as many as 7 standard targets which didn't print. It's part of the reason I think these targets will print. Last year, the market was around 4,800. I had 7 standard targets going down into the 3,700s. Based in part on that, I said those would print, and they all did. I'm now saying these higher targets are going to print. I've never had a year with 7 weeks worth of unsatisfied targets. I think that number is going to drop and will very likely drop to 1 or 0. I've never had a year with 3 ultimate targets which didn't print. In fact, in the previous 20 years, I only had 8 targets which ultimately never printed. So either this is an unusually big statistical outlier, or we're going to recover those ultimate targets which are at substantially higher prices. So all those are also arguing for higher prices in 2023. Here's our long-term chart. The market's been going up for hundreds of years. We've now completed a corrective ABC wave, and this low is perfect fib target, perfect trendline target, and I think that low is going to hold. A lot of people look at this rally and count it as a 5. I think it's a clear 3-wave pattern. A lot of people think a B wave can't be a rally wave. Well, inside B waves, you've got A waves, which can be impulses, 5-wave structures, and you've got C waves, which can be impulsive 5-wave structures. And that's because of these subwaves A and C, that a B itself can look to be impulsive, even though there's no good way that I can find to count this as a 5. But just because C waves can be impulsive, it doesn't mean they have to be. This is an overlapping structure, and part of the tenets of Elliott wave is that overlapping waves are corrective waves and that sometimes they should retrace. So this is additional evidence that this decline is going to be fully retraced. Doesn't mean it happens tomorrow. Well, here's how I'm counting things. We have this low as a low going to hold. We have an ABC that completes green C. We've got 5 waves up. We now should be making an ABC down. We have the first wave. We're in a corrective wave, and at some point we should drop lower. But that doesn't mean this wave's over. Let's focus in on it. This was my original count. Still could turn out to be right if that's a triangle. But I originally had this as an ABC, and if that was the end of wave 2, this wave down should have been a 5-wave structure, ideally, if we're going to have a big drop, and that's not a 5-wave structure. That's a clear 3-wave structure. I think there's a preferable count. This count has us completing the first wave down, and then an A and a B with wave C coming up. And to see why I now prefer this count, we have to go down to a 5-minute chart. This all starts on the 20th of the month. We have wave A up, and we're now counting this as a B. And to see why, we have this as an A, a B, and a C with good fibs. If you count this as A, blue A, you want blue C to have some kind of Fibonacci relationship to it. There are 2 ways to count it. One is from the start of the wave to the end of the wave, and that's a perfect 38.2%. The other way is to count from the highest price we reached during the wave to the lowest price, and that's 61.8%. I'm assuming these things don't happen by accident, and that's the end of wave black B, and we're in black wave C, which should likely have some kind of relationship to wave black A. But when that ends, we get another big drop, because don't forget the first drop here is 300 points. And when this wave black C completes, we could have another 300-point drop. The gap down hit lower lows, closed over all the lows. It's a bullish pattern if it's maintained at the open. Gapping, taking out this low kills it. This on the last trading day of the year is certainly compatible with tax-related selling, which dries up. And then you get this big rally when the sellers are all gone. It's hard to reverse trends on Friday, particularly Fridays before holiday weekends. It implies this is the real thing and should continue higher on Tuesday. Tuesday's pattern has the early high. We could still gap up. Should be down. Okay, that's been fixed. Friday we gapped down, hit a new low, closed over intraday lows and even intraday highs. Unless we gap and promptly undercut that day's low, it's a very bullish pattern, should lead to higher prices. regardless of where we close. The late rally is compatible with tax-related selling being exhausted and nearly always follows through when the market reopens. Put volume hit a daily all-time record last week and put-call ratios are at extreme levels. The wave count's compatible with a good rally as well. These are all contrary indicators. One of my trading rules is that the action of the first 1 or 2 trading sessions of a new year is counter-trend. Tends to be reversed and more by the end of the first 5 days of trading. So if that holds true in 2023, should have a good rally followed by a steep decline and then a huge rally which likely will go to new all-time highs. The new all-time highs wouldn't have to be this year, but wouldn't surprise me one bit. These are the patterns I'm looking for next week. Tuesday's pattern has the early high, and that's today's call.